This is ShadowQuant, Crypto Edition, brought to you by AresLabs.ai. Before we begin, please note, what you are about to hear is an AI agent panel. All analysis, voices, and production are generated by artificial intelligence. Nothing you hear constitutes financial advice. Always do your own research. Today is Friday, August 7, 2026, and this is the Tokyo session. Now, let's get into it. We are sitting in a paradox that defies standard market mechanics. Bitcoin is holding green at $64,846, and Solana is up 1.1% to $73.58. Yet the fear and greed index is buried at 14 out of 100, the deepest extreme fear reading we have seen. The SIBO VIX is whispering at 15.81, signaling total complacency in global equities, while crypto investors are screaming for cover. How do you reconcile price strength with emotional collapse? Before we dissect the divergence, let's look at the macro backdrop. We are seeing a structural decoupling. Equity risk is low, but crypto sentiment is at a nadir. Bitcoin futures demand has hit 2024 lows, yet spot prices remain anchored. The primary question for this session is whether this is a genuine capitulation bottom driven by institutional absorption or a fragile standoff before a liquidity squeeze. Turning to the newswire, three headlines are actively shaping the flow. First, Cointelegraph reports that Iranian crypto outflows spike 700% after U.S.-Israeli airstrikes, creating immediate sell-side pressure on Asian exchange venues. Second, CoinDesk notes that PayPay, 40% owner of Binance Japan, seeks up to $1.10 billion in Nasdaq IPO, introducing structural uncertainty for XRP and Japanese market dynamics. Third, Cointelegraph highlights that U.S. Senate housing bill includes CBDC ban, providing a regulatory tailwind for decentralized networks. Let's unpack the market implications. The 700% Iranian outflow is the dominant sentiment driver right now. We are seeing a classic flight to safety reaction, where geopolitical shock triggers panic selling in peripheral markets. However, the fact that Bitcoin and Solana are not crashing despite this massive liquidity drain tells me the fear is concentrated in smaller caps and regional exchanges, not the major liquidity hubs. The 14 over 100 score is accurate. It reflects the anxiety of traders watching their alt-bag values erode, even while the majors hold.
On the flow side, that 700% spike is a localized liquidity event, but it's masking a bigger trend. Bitcoin futures demand is at 2024 lows. We are seeing spot accumulation absorbing the sell pressure from Iran without any help from leveraged longs. This is a spot-supported rally, which is fundamentally different from a leverage-fueled pump. The capital isn't entering via derivatives. It's entering via cold storage and OTC desks, bypassing the exchanges where the Iranian outflows are happening.
And that brings us to the danger. You're calling it spot-supported CIPHER, but I'm calling it under-collateralized. With futures demand at rock bottom, there's no hedging mechanism protecting these prices. If that Iranian sell-off spills over to the main liquidators, or if spot inflows slow even slightly, we have zero buffer. The VIX at 15.81 suggests the broader market thinks everything is fine, but in crypto, the lack of open interest means we are walking a tightrope without a net. The extreme fear isn't just sentiment. It's a correct pricing of tail risk that the VIX ignores.
Let's test that thesis on the primary anchor, Bitcoin. It's up 0.7% to $64,846, holding steady despite the futures vacuum. Grid, where is the technical floor?
Technically, we are seeing a compression pattern forming around the $64,000 to $64,124 area. That 24-hour low of $64,124 acted as the initial bid, and the current price of $64,846 suggests buyers are stepping in just below the psychological 6-4 mark. In a low VIX environment, this kind of narrow-range consolidation often precedes a volatility expansion. The fact that the 24-hour high is only $65,312 means we aren't chasing tops here. We are grinding upward on thin volume. This is a low-effort advance, which usually indicates weak hands are being washed out rather than strong hands taking profits.
But look at the volume profile grid. There is no aggressive buying volume visible in the order book. The 0.7% gain is being achieved because sellers are drying up, not because buyers are aggressive. The 2024 low futures demand confirms this. We aren't seeing institutional arbitrageurs adding size here. It's a defensive hold, not an offensive breakout.
I agree with CIPHER on the lack of aggression. The sentiment data supports a wait-and-see posture. Retail is terrified, as shown by the 14/100 fear gauge, so they aren't fear of missing outing into Bitcoin at $65,000. They are sitting on their hands. This creates a stalemate where the price can drift higher simply because there are fewer sellers willing to hit the bid. It's not a bull market rally. It's a bear market pause, where courage has temporarily run out.
Which makes that $64,124 low incredibly dangerous. If that level breaks, we don't have futures volume to stop the bleed. We have a void. I'd be wary of interpreting that $64,846 level as solid support. It's support only as long as the news doesn't get worse. The moment that Iranian outflow narrative expands to other regions, that technical floor vanishes because the liquidity required to defend it isn't there.
Shifting to the sector leader, Solana. It's up 1.1% to $73.58, outperforming both Bitcoin and Ethereum. Grid, what does the structure look like for Solana?
Solana is showing clear relative strength compared to the broader market. At $73.58, it is broken above the local psychological barrier, and the 24-hour high of $74.26 suggests there is still some upward momentum in the final hour. Compared to Ethereum at $1,913.54, which is barely up 0.5%. Solana is acting as the proxy for high beta risk-on in this environment. Technically, the move above $73 is a valid breakout on lower volatility, which tends to have higher continuation probability than high-volume spikes.
The flows back this up, but selectively. We are seeing capital rotate out of AI compute narratives like NEAR, which is down 3.9%, and PHIL, down 3.1%, and into Solana. This is a flight to liquidity trade. Institutions and large players are dumping narrative-heavy tokens and parking cash in the most liquid layer 1 available. It's not necessarily bullish on Solana's fundamentals, but it is bullish on its ability to absorb volume without slippage. The 700% Iranian outflow is hitting the smaller caps harder, so Solana benefits from being the safe high-risk asset.
That rotation theme is critical. So Pulse, if capital is fleeing NEAR and FIL for Solana, is the sentiment shift occurring specifically within the altcoins, or is it broader?
It's very specific to the narrative hierarchy. The 14/100 fear index is driven by the pain of holding the losers. NEAR, PHIL, APT. Those assets are bleeding sentiment because the story is fading. Solana is bucking the trend because it has become the default vehicle for speculation when the broader market is too scared to touch anything else. The sentiment isn't bullish. It's defensively speculative. People are using Solana as a casino chip because it's the biggest chip left on the table. Let's address the regulatory catalyst everyone is watching, XRP. PayPay is seeking a $1.10 billion Nasdaq IPO, owning 40% of Binance Japan. Yet, XRP is down 1% at $1.02. SPECTER, you mentioned earlier that this might be a mispricing. Explain the disconnect.
The disconnect is regulatory skepticism versus corporate reality. Yes, PayPay is listed, and yes, they own a stake in Binance Japan. But the U.S. market is still wary of any asset with historical regulatory entanglements tied to centralized exchanges. XRP is down 1% because the market is asking, does this IPO change the SEC's stance? The answer is likely no, not immediately. Therefore, the price action reflects continued caution, not optimism. The -1% drop is the market pricing in the status quo, not the IPO news.
From a flow perspective, XRP is suffering from a lack of fresh inflows. While Bitcoin is attracting spot buys, XRP is seeing net outflows or stagnation. Traders are waiting for a clearer signal before committing capital. The PayPay IPO is a structural update, but it hasn't changed the daily trading dynamics. Until we see a surge in exchange inflows or a break above the recent resistance, XRP remains a watch list asset, not a trade list asset.
And sentiment-wise, the retail crowd is frustrated. They bought the headline, and the price dropped. That breeds negative sentiment faster than good news breeds positive sentiment. The 14/100 fear index captures this frustration. Traders feel punished for reacting to news, so they are becoming more cautious overall, which drags down correlated assets like XRP even if the underlying news is neutral to positive. Finally, let's look at the laggard, Near Protocol, NEAR. It's down 3.9% at $1.59, leading the decline in the AI/compute sector. What's driving this bleed?
Technically, NEAR is in a clear downtrend. The 24-hour low of $1.58 is being tested, and the minus 3.9% move indicates heavy selling pressure. Unlike Solana, which is consolidating, NEAR is expanding its range to the downside. In a low volatility regime, breakdowns tend to be cleaner and less prone to fake outs. The chart suggests there is no immediate support until we find a new equilibrium, possibly lower.
The flow data confirms the rotation I mentioned earlier. Capital is actively moving out of AI narratives into layer ones. NEAR is the victim of this sector-wide rebalancing. It's not necessarily bad news for NEAR protocol itself, but it's bad news for the AI narrative premium. Investors are derading speculative compute tokens in favor of proven infrastructure like Solana and Bitcoin. The 3.9% drop is the market repricing the risk/reward of AI tokens relative to established chains.
And here is the risk. If this rotation continues, we could see a cascade effect. As NEAR falls, margin traders holding AI tokens face liquidation, which forces further selling into the market. Without futures volume to cushion the blow, as we discussed with Bitcoin, these downward moves can accelerate quickly. The minus 3.9% could easily turn into minus 6% if the broader fear index doesn't stabilize. It's a liquidity trap for anyone holding these narrative tokens.
So, to summarize the landscape, we have a structural divergence. Equities are calm, VIX 15.81, but crypto is in extreme fear, 14/100. Bitcoin is holding at $64,846 on spot strength alone, with futures demand at 2024 lows. Solana is leading the charge at $73.58, benefiting from a flight to liquidity. Meanwhile, AI narratives like NEAR and FIL are being dumped as capital rotates to safer bets. And XRP remains stuck at $1.02, lagging behind its own regulatory headlines.
To synthesize, Grid identified the fragile technical floor at $64,000 for Bitcoin, but CIPHER confirmed that this floor is built on spot accumulation, not leverage. Pulse highlighted that the 14/100 fear is driven by the pain of laggards like NEAR, while SPECTER warned that the lack of futures depth makes any breakdown dangerous. The consensus here isn't that the market is crashing, it's that it is compressing. We are in a period of low-energy consolidation, where the direction is determined by which sector gets the next wave of capital. Right now, that capital is flowing to Solana and Bitcoin, away from AI and speculative alts.
Our key takeaways for the evening. First, monitor the $64,000 level on Bitcoin as the critical hinge. A break below would expose the lack of futures depth. Second, watch Solana's ability to hold above $73 as a sign of sustained flight to quality and high-beta assets. Third, be aware that the extreme fear index is currently suppressing broad market rallies, meaning any upside will likely be selective rather than universal. We'll see if this spot-supported anchor holds as the week closes. This has been ShadowQuant Crypto Edition. Thank you for listening. This is AI-generated content for informational purposes only, not financial advice. That wraps up this edition of ShadowQuant Crypto Edition. Stay tuned for the London session, where we will see how these calls play out. Until then, trade safe.